GM. GM. Okay, we go again. This is take fucking 3 because Brave browser keeps crashing whenever I screen record. And so I've disabled hardware acceleration. Let's see if that works. The last 2 times I got 6 minutes into my video and got rugged. So you can see all these drawings on the screen that make no fucking sense. Let me make sense of them. So, first thing, Bitcoin currently is up at a level right into the highest volume point from 2021 and 2022 until lunar collapse. Basically, all the price action we had above 28k pivot, Bitcoin is now back at the level with the highest volume distribution, right, from over there, okay? 38.9, 39.1, whatever. It's roughly around that 39k area. Now, on a daily chart, if it is going to front run that, right, if that level is going to break, or going to not break, I should say, if that level is going to hold, then I think we're close enough, which actually is more closer to 39. Move that. Right? When there's such a high volume node, you have to think about it. Buyers, sellers. That's all volume is. You don't need to worry about who is buying, who is selling. You need to say that, okay, if 39k is the highest volume node of the entire 21 and 22 price action that was conducted above 28k, then lots of people are trapped, lots of people are long, lots of people are short, either side of that. So when we come up to it, and given that we were above it for a long time before, when you come back up to it, you have to understand that that means longs are underwater and they're just getting back to break even. And some people are going to take profit or get out or cut their losses or whatever. It's going to create resistance. So I don't think we just blast through it necessarily. I think if we do, I think we probably pull back from it, because you can see here that the highest volume cluster goes right up to that 40,800, which is the other pivot I've had drawn for several weeks now, which is nice confluence. And so I wouldn't be surprised to see this path here, which I guess I'll put in green, right? Where it pops up, back below, back down to our other pivot, leaves the gap, and away we go. This isn't time specific, right? This takes us into March, April. Like, this isn't time specific. The other option is like blast off into the ETF, right? Up towards maybe the other 48k pivot, but then all the way back down and into these gaps. I talked about these gaps. Gaps get left behind. The reason gaps get left behind in bull markets is because there's disbelief, right? So here we had a big gap. Big impulse weekly candle that Bitcoin made because there was loads of disbelief, right? There were not that many longs, there were too many shorts, and there was lots of people sidelined. That's the most important thing. When the market's sidelined, that's when you see those best type of moves, because it literally leaves people behind. Again, you don't always want to think about low time frame longs and shorts. On a zoomed out perspective, those people are irrelevant. They don't mean shit. They're going to get liquidated on a 10% move anyway. So don't obsess about longs and shorts, especially shorts. Think more from a cycle basis. Think more about who is sidelined. And sideline means you didn't buy because of fear at 15, 16, 17, then boom, away it goes. You never get 15, 16, or 17 again. Right? The lowest we come on the scary wick was 19.7. But of course, it was a scary wick, so those people still probably didn't want to buy. Boom, away it goes again. Impulse is even higher. We never see 21, 22, 23, 24 again. We come back down as low as 25, and that gap gets left. Same thing, people are like over here, oh, I'm going to buy 25, I'm going to buy 24, I'm going to buy 21. Boom, away it goes. 2 big weekly candles. We don't see 28, we don't see 29, 30, 31, 32. And now the question becomes, do we see those again? Do we ever see those prices again? The answer is yes, in my opinion, but not lower. And so when you look at gaps that get left behind in bull markets, which is what we're really looking at here, because the essence of timing a good trade on the long side is trying to find an area that you believe price is breaking out of where it won't return. Because on every chart, price does that every cycle, but there's only usually one or two areas. So why do I say that? I say that now, for example, that everything that happens in here is different. You notice the shift in character, right? Impulse never came back. Impulse didn't come back. That's because the market was in disbelief and sidelined. Now, every single micro pump since then has been heavily bought into, right? Breaks out, full retrace. Breaks out, full retrace. Pushes up, full retrace. Pushes up, pushes down, full retrace, but grinds up, full retrace. Pushes up, breaks out. What next? Well, we've got a gap here. If we go to maybe a 1 hour or a 4 hour, you can see it. I do not think all this gets left behind for Bitcoin to break out. It just doesn't, because we're not in the mood of leaving gaps. It's not in the mood of giving people free rides, right? So the clearest gap you've got here is this move from 36.6 up to 36.9. It tried to fill it in, it pushed up higher. But if you look on the 4 hour perspective, the daily perspective, it's left a lot of untapped lows behind. So especially since it left those untapped lows and then went and took out the highs, I don't see how this doesn't get filled in. Because it's the same thing. Like, you only had a few opportunities to be long and unable to be wrong, which was if you just aped in after this impulse candle, you couldn't be wrong. In hindsight, obviously. If you just aped in anywhere here, you aped into this breakout, you couldn't be wrong. Those are literal free rides the market gave to anyone who gave them. They were free. There's no more of that. The reason they were free is because there was an imbalance of longs and shorts, and there were too many people still sidelined. Too much big money that thought we wouldn't break out so soon, and they wanted to buy lower, and they didn't get a chance. And so the market ran away from them, does not give them a chance to get back in, because the market knows that eventually these people will have to get back in, and when they do that, they're going to be buying the bags off of whoever's selling it to them higher. But every single move on every coin now is not following that principle. I used Fetch as the example 2 weeks ago. Fetch is a perfect example. You've got a weekly chart where it shows it really clear. You got your gap, right? And I said this exact move would happen, and it was when we were down here. I said Fetch would keep going up and up and up and up. It would eventually distribute, come all the way back, and all those people who ape into Fetch here, round trip their net worth, get stopped out at zero, fucking panic and sell, and then away we go again, right? That's obviously that hasn't happened yet, but for 4 weeks it's been exactly what I said, so I can see no reason for it not to continue, and it's just a carbon copy of what Fetch did in January. I mean, it's hilarious. So what happens next? Well, if you look at it on a daily perspective, well, actually the weekly shows it too. If you look at it on a weekly perspective, right, you get back here in January, you get 1 week, 2 weeks where there are gaps left, meaning there's no down wick, there's no retracement. That means there's no one getting stopped out. There's no down wick in this candle, there's no down wick in this candle, there's barely a down wick in this candle. That's disbelief, because no one's even getting stopped out, even over here. Right, then next week, go. There is a down wick. Following week, big pump, there is a down wick, and massive overextended wick, fills it in 3 weeks later, fills the whole thing back in, because you cannot just keep going up forever and giving everybody a free ride and fucking nobody over. It's just not how the market works. So we got our gap candle, we got our consolidation, but Fetch has been really choppy since then. Wicks either side, right? So all these weekly candles, there's no gaps. They all have full wicks and tails, full bodies, and they're retesting. And when you go to a daily, it's even more clear. Right? Fetch has been up only on a weekly. But look how messy it is on a daily. Up and down, chop and false breakout, chop, just chopping its way higher. And that's the game. That's how price is going to move now, because it cannot and it will not move with a lack of resistance like it did here, because there are too many people getting on board. It is a crowded market. You need to understand this. I'm sure you do understand it, but I'm just repeating it because it bears repeating. Fetch was literally half the price, so it's doubled since the point at which it was not a crowded trade. It is now crowded. It's up 100%. So anyone who bought here, remember, they can sell now at a profit, and that's what they're doing. and they're buying back, and they're chopping people up, and they're taking out leverage traders. And idiots, not idiots, but dumb money, are trying to long every breakout, get on board because they feel like they're missing the bull market. And it's a self-fulfilling prophecy. They're just going to get themselves chopped up. They're eventually going to round trip their net worth. And it's going to go into a phase again at some point where they forget about all the bullishness because it goes down for 190 days. They think, fuck fetch, just like they said, fuck fetch here, fuck fetch here, fuck fetch here, fuck fetch here. They're going to forget about it. They're going to say, no, it's a scam. AI hype's over. And then away it goes again. Right? So if you missed this fucking, from bottom to top 3x move on fetch so far, then just be patient. Right? And same thing with Bitcoin. So back to Bitcoin. Just fetch illustrates the point quite nicely. Bitcoin's now coming up into the highest node of volume, highest point of resistance. Don't know why the fuck this keeps moving. It's annoying the shit out of me. Anyway, highest point of volume from 2021 and 2. It's attempting to break out, but it's had multiple false breakouts. The latest being just yesterday. And you've got gaps below to stop any freeloaders. So I'm not bearish Bitcoin. I don't think that false breakout is like significant in terms of that's it, market's done, game over. But I do think it might drop us into a little bear trap and take out a bunch of these lows and just fill in this inefficiency. Right? If we just go down to there on the 4-hour chart, that's a gap fill right there. And if we take out this low down here, that's basically a full retest of the whole move. And you've seen it happen. It happened over here. We broke away from this level. Where did price come all the way back to? Right into that. Why? There are no free rides. So even a valid breakout that was totally valid, right? We pumped up, broke out, clearly broke out, spent several days above it, dipped all the way back, took all that out. So that's just the nature of the market. It's like, it's upwards consolidation, it's upwards grind, but it's like mean reverting upwards because everyone is trying to ape in long with massive leverage or any leverage, and they're going to get stopped out. Only spot holders will have an easy ride here until the ETF. So that's just more of a little bit of a zoomed out view. Just to understand why, if you're trading and you see 4-hour and above, you see gaps now at any point, up or down, but mostly up, understand those gaps will get filled. So just like this breakaway move here up into resistance, I very publicly said and said it in the chats, this is not going to break out, in my opinion. Obviously, I didn't predict the future. But the move up was not one that told me that it was going to break out, which is too much left behind. Came all the way back, filled it in. Right? So we had one here. Everyone was bearish at this point. CZ firing, leaving, blah, 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 sued, up it grinds, blast off. Once that blast off candle comes, what do people do? They flip bullish. They go long, 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 long. Where are they in trouble? Right back down here. Now it just has to be a wick. Maybe it's a bigger correction finally, right? Because these have been getting bought up so far, so the market's conditioned. I'm by no means saying if we come there that we stop there. Maybe we go to 35, maybe we go to 34, 33, who knows, right? Maybe it's time for a proper trap and really get the bulls shaking. But the main thing is that there's not enough disbelief for there to be a breakout yet without a pullback. Because it's up only. Everyone's chilling in profit. Nobody's suffering unless they're 100x leverage moonboy. Ape. Now, if we did flush down, right, let's say we flush down like that, and price started to consolidate and look like shit, then it could have a gap, consolidate, and away it goes, right? It could easily do that. Why? Because this breakdown, this shitty consolidation, would lead the market into pure disbelief and fear and anxiety. And then it blasts off. Everyone's like, oh, need to get back on board, need to get back on board. They don't get back on board because there's no pullback. That is how it, not how it will work, but that's how it should work, or I would expect it to work if we're going to have that kind of move. Kind of similar to what will happen over here, right? We had our nice little trend up, But then we had a pretty bearish sell-off, just kind of rolls over right down. And everyone's like, oh, it looks like shit, blah, blah, blah. And then boom, pops up. Everyone's like, oh, don't worry, I'll buy a dip. Fucking away it goes. Never come back. Yeah? So that's what I'm looking at. That's the view. I haven't been rugged by Vimeo, so maybe turning off hardware acceleration really does work. Thank God for that. GM, see you all later, live stream, 5 p.m. UTC.